All right, welcome, guys. So this call is all about this week market, all right, from Monday to Friday. So let's look from the macroeconomics perspective. So this covers through the macroeconomics for the week, what the market is looking at from the macroeconomic lens, especially this is focused on the USD. So it's not to do any other market. So focused on the USD market. So, and of course, it's tailored to two pairs, Euro USD and Pound USD. So we'll be touching on it and we'll see what we'll have. Okay. And um, a quick reminder, this is coming from Macro Lab FX, and the person you're hearing his voice behind the screen is no other person than George. So I'll be walking you guys through on what we have on our macroeconomics lens and what we see through the markets this week. So welcome to July, the second half, the start of the second half of the year. It's been an exciting half of the year, and we look forward to completing it in a very profitable state. So let's dive in quickly without wasting more of our time. So this covers from 6 to 10 July, right? And look at the weekly regime. Our weekly regime is staying on labor weakness and sticky inflation, right? So this is our current regime. We saw last week NFP came out a little bit lower than expected, and that drove markets into somewhat believing that the US labor market is largely deteriorating, and that gave strength to pairs like Euro USD, Pound USD, and gold. We saw the US DSY declined, although the 2-year yield is still holding true above 4.0, so, but it's not yet confirmed. I don't want to go detail, but let's just stay on it. Okay. So this is the weekly macro regime. Labor weakness meets sticky inflation. Our primary driver for this week is going to be FOMC Minutes and ISM Services. So our primary driver for this week will be FOMC Minutes and ISM Services. So these are the two key drivers for the week. So our key risk will settle on FOMC Minutes, reveal stronger support for tightening than market expects. So we expect the FOMC minutes on Wednesday. And this week, FOMC minute is very important because it's actually the first FOMC minute coming from Kevin Walsh regime, the new chairman of the Federal Reserve. So it's going to market is going to pay attention to that minute to give us a clue of what the Fed board members are thinking about the economy, especially on Kevin Walsh perspective. So I think that report or that minute is going to hold a substantial volatility. Of course, our primary driver will settle on FOMC minutes and ISM services. FOMC minutes taking the lead for the week. All right. So having said that, let's quickly dive into the second slide. The second slide touched on the week in contest. So let's look at the week in contest, which settles on the June employment report. The June employment report settles on that. Sorry, let me. All right, so the weekly report settles on June unemployment. You can see that we have payroll rose 57K, and that tells you that the number coming from NFP, from BLS was not encouraging for the US economy, right? April and May was reversed down, very down. And what the market is pricing currently, you could see, we got it from Reuters a little bit from our research we did, that one measure of September hike probability fell from 75% to 60% after the employment report. Market reduced near-term Fed tightening expectations. So clearly, you could see that the reports reduced the rate hike probability for USD, which gave Euro USD and Pound USD a little bit of a shoot up. Okay, so the framework before and after NFP, we have a sticky inflation. Sticky inflation is still there until we get the current CPI data and PCE data. Resident labor was there before. Now it's weakening a little bit. Higher for longer Fed was there. Now policy uncertainty because of the NFP report we got. USD was supported before now, and now pressure is on USD to the downside. So what this week is for is that the market is no longer looking for another employment shock. It's looking for confirmation. So, and that confirmation is going to come through FOMC Minutes and ISM Services, particularly for FOMC Minutes. Let's leave ISM Services on the side. Particularly for FOMC Minutes, you want to see the tune coming from the Fed from that minute, how they see the economy, particularly on inflation perspective. If the risk of inflation have reduced drastically, or if the Fed body do not see too much risk on inflation, that will, create some volatility from bring some volatility to the bond yield and to DSY as well. So if there is no inflation risk, then DSY is going to price lower, bond yield is going to slide lower, Euro US is going to price higher, Pound US is going to price very much higher. Quite simple, straightforward. So what do we have on our list here on the second slide, third slide rather, the weekly regime alignment? What do we see on our weekly regime alignment? So now the way we structure our weekly regime, right, it comes from a constructive monthly outlook. So we don't just take up weekly regime, we look at from the monthly full picture, which most times we don't post our monthly outlook online. We can only post our weekly outlook online, and that is it for that. So we expect we do more of weekly analysis and what it entails really. All right, so this gives us a view of what we should do and what we shouldn't do for the week. So let's quickly look at that. The July monthly regime was a policy discovery for us. It was largely a policy discovery. Why? Because we want to understand where Kevin Walsh is and where he's going to, and perhaps get a clue from what his policy is going to be like in the economy. Now, our weekly regime is settling on labor weakness and sticky inflation, and the Fed theme is staying on restrictive, but facing a dual mandate conflict, which is labor and price. The market has one question, which is, does weak hiring change the Fed path? Markets still have that question to answer, which is not yet clear, but we might see that change coming in very quickly than expected. Then our confirmation signal will be the US 2-year yield and Fed repricing. That is actually true. If we see the 2-year yield pricing lower, then we could say that the market is going to price a lower DSY and a higher Euro US and Pound US than all of that. So now, our positioning and sentiment for the week is we're still seeing USD a defensive after week, so it's mildly negative. Euro is mildly positive. Pound is neutral positive. Our US 2-year yield is sensitive to Fed repricing, which is cool, yeah, because we've seen some repricing coming from Kevin Walsh's comments on I think on Wednesday. We've seen NFP supporting that as well. So primary confirmation indicator will rest on the US 2-year yield. Oil is lower because we've seen less inflation pressure, and the risk sentiment has improved. And this is mild USD negatives because, of course, we've seen USD pricing down because of some macroeconomic and fundamental functions coming in. We've seen lower price oil, which have reduced the inflation risk. We've seen weak NFP, which has reduced the hiking possibility in September, and reduced the hawkish narrative from last Fed meeting. So far so good. We could see USD pricing lower, not too aggressive, but in a more continuous form, until we see more data coming from the CPI next week. Next week, and all of that. So let's dive into the next slide. We have the event calendar, which is more important. Now, we are in the event regime. So what does that mean is every regime, every red folder calendar for the for USD is going to carry substantial volatility. So if you're not very good in trading news, perhaps you just want to stay out and trade the post narrative. If you're very good at trading news, it's an opportunity for you to make to make substantial wins on your investment or on your portfolio. I want to position properly. So what we have for our tier one is the Euro retail sales on Monday, the ISM Services on Monday, FOMC Minutes on Wednesday, the initial jobless claim on Thursday, just to give us a clue of what the labor market is saying. So I will stay on that, and we'll move to event volatility ranking and all of that. FOMC Minutes this week carries a very higher risk, or carry a higher volatility for this week. And why is this so? Because this is the first minute that's going to come out after Kevin Walsh's appearance in the last FOMC meeting. So market is going to look out for that minute very importantly, and we're going to touch on it, right? We're going to touch on it, and we're going to see how that goes, right? So now we have FOMC is very high, is extreme to be our major driver for the week. What ISM Services is high, trade balance is low. So for me, this is the two guys we're going to pay attention to this week. So one is on Monday and the other is on Wednesday. On Monday is 10 a.m. Eastern time. On Wednesday is 2 p.m. Eastern time, right? So let's see what we have. Okay, let's look at the central bank scorecard this is very important. Now, Fed is data dependent. So now if you hear data dependent on Fed, on any central bank, it tells that incoming data will carry substantial volatility. Then our weekly focus will be FOMC minutes after week NFP. The FOMC is neutral to mild negative, honestly. So I expect USD to price lower, honestly. I do not care what FOMC minute will say, but I care. I care, right? Right. But I'm sure that is going to price lower. DSO is going to price lower, so it will stay lower this week. No doubt about that. Yeah, regardless of what FOMC minutes will say and all of that, or might be range, but I expect pricing lower on DSY. They will have ECB neutral hawkish, BOE neutral hawkish, and the implication is neutral positive, pound neutral, still positive for pound as well. And we'll look at that. Then Fed, ECB, Bank of England, weekly detail. guys, you can read up this, right? I don't want to make this video so long. You can read up what it is. But let me touch on it a little bit. Fed Wash remains committed to 2% inflation target, and it's very clear that it's not going to stay on any kind of forward guidance. The market should depend on incoming data, clearly stated, straightforward. For me, that's the forward guidance. Yeah, that's the forward guidance. Depend on data. It's forward guidance. It means go deal with it, right? They will have ECB. They will have Bank of England. Bank of England last week, government value was a little bit hawkish. In fact, it said clearly there is no any form of renewed rate cut expectation from Bank of England. And that was a hawkish statement. And that was why you're seeing UK pounds running very high on Wednesday into Thursday, and of course, closing the week on a high note. All right, so this is our trade implication for the week. The minutes will be interpreted against data release after June meeting. Even hawkish minutes risk looking stale if the market believes labor has materially weakened. So what this means is DSY may trade lower, right? And this is positive for pound USD. This is Euro USD is positive for pound USD as well. Then we have the focus point 1 and 2. Right, our focus point 1 and 2 will center on labor markets weakness, and focus point 2 will center on ISM Services and ISM Manufacturing PMI coming on Monday. Our focus point 3 will be hawkish minutes, headline sensitivity, and all of that. Then of course you can see our huge reaction matrix and what it entails, for us. Then we'll have our probability scenario matrix. What we think will happen. This is where it's quite interesting. Our probability scenario matrix. I want to, stay on this for a while. Our scenario is policy conflict persistence. Okay, we're seeing 45% probability that Euro US is going to be mild bullish, pound US is going to be mild bullish for the week, and US is going to range to mild bearish, right? This is our scenario for the week. Clearly, policy conflict, probability scenario clearly states weak labor market, sticky inflation, and Fed cautiousness. All right. So this is our macro outcome, and this is where we are saying, okay, if this is the case, then this is going to be the case, which is our high number for the week. Then Fed reasserts hawkish control. Then our probability weight on it is 30%, which controls this is strong services, sticky prices, and hawkish minutes. Then US is going to be bullish, Euro is going to be bearish, and it's going to be bearish. Labor weakness broadens, which is 20%. Weak services employment and rising claims, then this is going to be bearish, this is going to be bullish, this is going to be bullish. So this we assign this 20% on labor weakness broadens for this week, because if the labor narrative becomes more exposed to the market, then Euro and pound is going to be extremely bullish this week, which I really doubt. Yes, we're going to see bullish. We're going to see EURUSD price higher. We're going to see EURUSD price higher. We're going to see pound USD price higher. We're going to see Euro USD price higher. But I don't expect aggressive pricing this week. However, we'll see to that as the week opens. So the highest conviction view will be Euro USD buy pullbacks, monitor 2-year yield, treasury yield as a primary confirmation signal for both pairs. All right, so monitor that and build your narrative on it, and that will be fine for you. Then our last slide stays on our weekly pair outlook. Our weekly pair outlook is we are bullish on Euro USD, we are bullish on pound USD. That's what we are seeing, and we have some and why are we bullish is we're expecting weak US payroll, lower near-term Fed tightening odds, potential downward pressure on US front yield, ECB no longer materialize, more dovish. The negative is if US inflation remains elevated, Wash remains committed to 2% target. Hawkish Minutes, particularly for Hawkish Minutes, the only thing that can change this bullish narrative for Euro USD and Pound USD is the FOMC Minute on Wednesday. I don't really see that coming in, but we'll keep an eye on it, right? Then our primary risk will be FOMC Minutes reveal a stronger internal preference for further tightening than market currently expect. So if FOMC Minutes says that we're going to tighten more, regardless of what we're seeing on labor, then market will pre-read it as a hawkish narrative, clearly. All right. And our secondary risk will be ISM Services, which is on Monday. This is not going to change the regime, right? But it could be on it on Monday. So guys, take your time to listen to this video more and more. Follow up on our channels. Follow up on all our handles. We're going to post, market commentaries, follow-ups on data, and what is actually coming up on the market on a daily basis. All right. So guys, the next video we're going to do is I'm going to do a video on the technical analysis perspective. This is for macro and the fundamental perspective and the narrative we have for the week. So guys, see you in the next video.